Hello from Tax Pro, and I just wanted to come on with another Ask Tax Pro moment. One of the questions that we're being asked in the office on a regular basis is, why do I have to report my marketplace insurance on my tax return? Well, let's start from the beginning. If you remember doing your application on healthcare.gov, it asked you for the anticipated amount of your income. Every individual does not receive the same tax credit from Marketplace. Some individuals receive 100, some receive 200, 300, so on. Now you're getting the picture. And that amount is based on your income. Because it is a tax credit, it is tied to your tax return in the way of, if you underreported or overreported your income, then there have to be adjustments that's made. That is why when you go to file your taxes, you are asked the question, did you have marketplace insurance? And if you did, you should respond yes and give your tax preparer the form 1095A that comes from the marketplace. If you do not hand over that documentation or answer that question properly, your tax return will be rejected by the IRS and it will not be accepted until you have provided your tax preparer with the 1095A or the appropriate numbers off of the 1095A. One of the ways that you can get a copy of your 1095A is to go to your account at healthcare.gov, log in, and next to where you see the little head for your profile, click on that. And when you click on that, you will see messages. Go to your messages. Most individuals have received their 1095A in their messages. However, if it's not in your messages, then you will have to call healthcare.gov's customer service and request a copy of your 1095A. What a lot of the representatives have been so gracious to do for some of my clients is actually give the numbers off of the 1095A so that we could go ahead and fill those boxes in while the copy is en route to them. They do have to mail the copy to you, and it will take a few business days for it to get to you. So hopefully this was very helpful. I know a lot of customers have been very frustrated because they are finding out that they cannot file without it, but it's just so the IRS can do the math to make sure that you receive the right amount of tax credit, because those people who underreported their income, unfortunately, you will have to pay back the excess. For example, if you reported that you were only going to make $15,000 and you made $25,000, you made $10,000 more than you said, and they gave you a credit based on $15,000 in income. So what they will do, and I'm just using these random numbers, these are not real numbers, guys, but what they would do is, if you receive the tax credit of $350 per month and you should have only received a tax credit of $250 per month, and you got marketplace insurance for 12 months, then let's do the math. 12 times $100 deficiency will mean that you will owe the government back $1,200, and they are going to take that $1,200 out of your refund off the top. They're not going to allow you the opportunity to pay it back. It comes off the top because it's basically a tax credit that you received in advance that you should not have received. So when they do the math on your tax return, they're going to take it back. It also works the opposite as well. Some people overreported their income. Say if you thought you were going to make $35,000 because that's what you normally do, and 4 months to the end of the year, you lost your job or had some type of accident and didn't work those 4 months. Then on the flip side, if you made $10,000 less, and if they gave you a tax credit of only $250 when you should have gotten $350, then that $400 would be an additional tax credit that you would basically get the money back that they've taken out from you. So there's benefits to it, and there are also cons to it. So make sure when you are filling out your application, I know open enrollment is closed, it ended on the 16th, but when you are filling out your application for marketplace insurance for the upcoming enrollment period, make sure that you, as closely as possible, report the income that you think you're going to make as closely as possible to what you think you're going to make. And if for some reason there is an adjustment in that amount of income, or you're going to make more, that's when you need a tax professional. Because with some people, for an example, if you worked a regular job and you reported that income and it was overreported, but you are also a business owner or you own rental property, there are ways that your write-offs may, you have to have the right amount of write-off, but your write-offs may cause there to be a reduction in your tax liability and a reduction in your income. So when there's a reduction in your income on the tax return, it may balance out so that you will not owe. So make sure that you get with a tax professional, especially one who is knowledgeable such as us at Tax Pro, if you feel like your income was underreported and you're going to owe, and we will search everything that we know to try and make sure that you won't have to pay the overpayment or that amount would be minimized according to the law. Thank you all so much for tuning in. This is just one more moment with Ask Tax Pro.